Good morning, everyone. Good morning. Hope you guys are doing well. Today is Wednesday, July the 22nd. Overall markets coming into today, as you can see, gapping down. So a lot of movement in the pre-market. On Monday, we had a gap up. Yesterday, we had a nice gap up rally towards the upside. Today, gapping down here, back down into that previous day lows. So SPY down roughly 0.38%. We're rejecting here off our previous day highs. Qs now back down into that previous day lows. The semiconductors are definitely a little bit weaker here in the pre-market, gapping down over 2.5% underneath their previous day lows coming into market open. So that being said, there is a couple things to talk about coming into today with the markets gapping down. We do have earnings as well, with Tesla and Google reporting in the after hours. So we'll head on to the charts here just in a second. Before we do that, what's up, everyone? Good morning. What's up, Kelvin? Good morning, B Roots. Andy. What's up, everyone? J10, Knight, Cody. Good morning, Lamit, Ashley, Andrea. What's up, everyone? Juan, KH, Senna, Deuce, Robert, Maria, Jose. What's up, Coach? Carlos, Bobby, Greg, Julius. What's up, everyone? Ron. All right. With that being said, let's pull up the economic calendar here and we will get started. At least for today, as I mentioned, we do actually have some orange folder news events. This is something to keep an eye out for. This was not on the economic calendar yesterday, but Trump is going to be speaking at 3 p.m. Eastern Standard Time today. And of course, we do have some unemployment news that is going to be at 8:30 a.m. Eastern Standard Time tomorrow. So we have the unemployment. As for the earnings calendar, as I mentioned, keep an eye out on a couple big names reporting this afternoon. Tesla after close, we have Google after close, ServiceNow, we have IBM, TXN. So we have a couple big ones for today, at least the major ones, Tesla and Google. So we'll see how that shapes up the markets kicking off earnings season here. And of course, tomorrow we have a big one, which is INTC Intel. That is going to be reporting on Thursday after close. Besides that, there's a couple other big ones as well, STM, but those are the main ones to keep an eye out for. If you are in any of these tickers, make sure to keep an eye out for the earnings calendar. With that being said, let's pull up the TradingView ticker here. Sorry, let's pull up the charts. There is quite a bit of things to keep an eye out for today. The levels primarily stay the same, but with us gapping down right into that previous day lows here, we do have a couple things to look for. There's a lot of gaps in the charts. So we're going to have a gap up, we're going to have a gap down. We're going to have a couple daily gaps on the charts here as well. So we'll talk about what to expect moving forward. We did have a nice bounce yesterday and a pretty strong candle close on the daily chart. But as you can see currently in the pre-market, we are gapping down here. So starting off on the daily time frame on the QQQ, you can see coming into this week, nice buyers that stepped in off the low that we had earlier in June, came all the way back down. Buyers are stepping in nicely, and we end up closing back above our key level of support yesterday, which was the reclaim support here, support bounce, broke underneath it. You can see rejected, and you can see reclaim this level here with a strong candle close. The size of the candle is pretty small, but if we're talking about the close in itself, we have a bullish candle close. And I can see currently we are gapping back down and we're right around the 700. If we go on to the hourly time frame, what I like to see now is really just the reaction that we have off this level, right? This is the level that we broke back above. Now moving forward, if we reject off this level, we can see a push right back towards the downside if we get back underneath the 704 hold for a push lower. If we do end up reclaiming back above, so yesterday buyers stepped in and we pushed towards the upside. Today, if we get back above our 704, we can see this flip And we like to see this push back towards our previous day close along with our previous day highs. We like to see it kind of build up higher lows here on the hourly time frame. So based off the hourly structure, right, I would say we're fairly neutral here, right? Yesterday we kind of broke back above. We had a strong daily candle close, but today with us gapping down, we're not invalidating the structure from yesterday. But what we like to see now is just a reaction here off our 704. To simply put, if we can maintain or if we can get back above, we can see continuation. If we break back underneath, right, we can see a push towards the downside. And then based off of intraday price action, we're just going to keep an eye out on this previous day low level. This one, we had a multiple touches on Monday, touch here in the pre-market, and this, of course, is our high that we created last week. So our 702 to our 704 is going to be key today. If we get underneath it, hold underneath, we can see a push down in towards that gap fill that we have created all the way down in towards our 698 on the higher time frames. If we hold underneath our previous day lows, if we can get above, we can see a potential mean reversion back up in towards our 708, which is going to be its previous day close. So there's a couple levels to keep an eye out for. We have a gap down in the pre-market, and then of course we have a gap up. This was from yesterday. So there's two gaps on the charts. Could go either way. Coming to market open, we're not going to have a bias, and we're just going to keep an eye on the reaction that we have off our previous day lows. As of late, you can see there hasn't been any sort of clear direction on the higher time frames. So we're just going to keep a more neutral stance in the market and keep an eye on the reaction that we have off key levels. If we go on to the ES, go on to the hourly time frame, the key levels that we have marked out, or sorry, if we go into the NQ, the key levels that we have marked out in this case, if we just kind of zoom out here, we have our high that we created. This is a key level from a few days ago. And then the next levels that we have, we can also mark out that previous day highs here as well. So coming into today, the key levels that we have on this hourly time frame is really just going to be this 29,100. Seems like a pretty big level that we have marked out. Let's actually go back to this. And the key levels that we can have marked out is, yeah, that previous day lows on the QQQ. So if you go into the daily chart, let's go onto the daily time frame. The key levels that we're going to have marked out in this case is going to be that double bottom. So far, as you can see, lower highs are being built on the daily time frame. If you do want to see that reclaim, the break back above this level is needed. You can see we kind of had a decent candle close yesterday on the NQ, but we very much well could reject off this area and we can continue the structure right back towards the downside, which is currently trying to do. We need to see the break back above our 30,000. That would kind of confirm the move back towards the upside, and that would also break structure as well. If we could break this level at a minimum, and of course, if you can break this lower high here on the daily. If we go into the hourly chart, the key levels that we have marked out, really this area, which is the area that we broke down from, touch here, which is our 29,200. And you can see we're kind of rejecting off this area on the hourly time frame. At least for today, the main levels that we're going to have marked out, pretty big. Let's just kind of refine this, but we can mark out that previous day lows. That's going to be key, and we can drag this up. So for the NQ, the key levels that we have marked out is going to be that 29,100. Previous day lows is going to be key coming into today. If we maintain underneath our previous day lows, we can see a flip towards the downside, all the way back down in towards this gap that we have on the higher time frames. And of course, if we can get back above our previous day lows, we can see a push back up in towards that 29,300. So this is what we have for the NQ coming to market open here. Now let's head on to the SPY chart. All right, so for the SPY coming into market open here, as you can see, we've just basically been ranging to start off the week. Monday ended up having a nice pop above our previous day, or sorry, our Friday's highs, rejected, bounced off key level support. Yesterday, bounced off kind of the middle of the range, pushed all the way up and towards our previous day highs. And now you can see we're back inside really the range that we have established for this week. If you go into the daily time frame, I'd say we're more neutral than anything. The SPY is leaning more bullish, but I'd say we're more neutral. We're in a fairly tight range within the past month. You can see July, most likely to its August, is very tight consolidation. We also did fill this daily gap back towards the upside as well. So we had this very small gap that we ended up filling yesterday back up and towards the 748. If we go into the hourly time frame, we're kind of right in the middle of the range. So if we draw this out, we have our bottom of the range, and we also have the middle of the range, and then we have the top of the range. So price kind of bounced from the bottom of the range, came up to the middle of the range, and now you can see we're having a little bit of reaction. Go back onto the 15-minute time frame. At least for today, if you go into the hourly chart, or sorry, the 15-minute, key levels that we have marked out, 748. You can see a little bit of reaction. Now we're back down into that previous day lows. Coming to market open here, what I'm going to have marked out is our 745. If we bounce off our 745 coming to market open, we can see this potential bounce play for a move up and towards that 748. This is the key levels that we have marked out. If we get underneath that 745, hold underneath that 745, you can see a push down in towards that 742 on the higher time frame. So key levels that we have marked out today, similar thesis. We're just going to keep an eye out on our previous day lows for the SPY. If we go into the ES, the key levels that we can have marked out, we can also mark out this previous day low level and go on to the hourly time frame. As you can see, we're just kind of consolidating, bouncing from our key level support, which is our 74.70, and our level of resistance 75.40. If you go into the 15-minute time frame, the key levels that we have marked out is just going to be that previous day lows coming into market open here today. If we can bounce off our previous day lows, we can be looking for a continued push back up in towards that 75.30. Of course, if we do get underneath our previous day lows, we can be looking for a continuation down in towards that full gap, which is our 74.90 on the higher time frames. So that's what we have for the major indices coming into today. Both the SPY and the Qs, the key levels is going to be that previous day lows. As for the semis are definitely a lot weaker here in the pre-market. We're gapping down. We're underneath that previous day lows. We're underneath key technical levels here as well. So we do have to be a little bit more cautious. The semis are now a little bit weaker. Yesterday, we had a nice hold of this previous day highs. You can see this previous level of support turn into, resistance turn into support. And we end up having this nice continuation higher only to gap down here. Now underneath our previous day lows and underneath our Friday's lows. So for the SMH, underneath our previous day lows, hold underneath. Now we can see a room all the way back down in towards 560. This is a pretty big move lower, but if we hold underneath, that is a possibility for a move towards the downside today. And of course, if we go into this on the hourly time frame, basically for the SMH, this is one of the key levels we rejected from. If you go into the hourly time frame, this is, let me pull up the EMAs here as well. Yeah, for the SMH, so yesterday we kind of gravitated back above this key technical level, but so far we can kind of see we're gapping underneath. So if we get back underneath, we very much well could reject and push all the way back down in towards that low that we created from last week. That is a possibility, especially with us underneath the EMAs where structure is still intact towards the downside. If you want to see some upside on the semis, we would need to see the bounce back above our 580, and we like to see this weekly candle close strong and a push back towards the upside, which it definitely may be a little bit more difficult now with this being a pretty big gap down, negative 2.6% here in the pre-market. So that's what we have for the major indices coming to market open here. Now I'm going to go on to some tech names. So if you guys do have any charts or any tickers you'd like me to go over, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. Okay, I'm gonna head on to some tech names here. As I mentioned, if you guys do have any charts or any tickers, you guys can now drop them in the chat. Seems like we're pretty good on time so far. We'll start off on Tesla and we will make our way down onto a few other names that we have. So, first things first, Tesla does have earnings today. There's really not too much to talk about on Tesla. We had a nice mini bounce, but we do have earnings. Anything that happens today is going to be insignificant. Tesla, I'm not exactly sure what the implied volatility is, but usually it's gonna move at least right anywhere between right 5 to 7% or a little bit more. So for Tesla today, we'll just wait for earnings to happen and then we'll wait for the reaction that we have in the after hours. If we're looking at Tesla in itself, underneath back below this back below this 378, we can see a push all the way back down in towards our previous day lows, which happens to be our 370 here on the higher time frames. The flip back above, we can see push back up in towards that 380. All right, let's go on to AMD. So AMD, pretty strong buyers that stepped in yesterday. AMD is one of the strongest tickers in the market as well. If we're looking at this on the or if we have the EMAs pulled up, you can see nice higher lows are being built on the daily time frame. We had this consolidation, broke underneath, a reclaim back above. Now what we want to see is this push back up and towards our all-time highs. For AMD, the key levels that we have marked out. If you go into the hourly time frame, we can just remove a couple things here as well. The main levels that we have marked out on AMD was our 500, and then other levels that we have marked out was our previous day high. So we have our 500 gapped above, held above our previous day highs. Nice continuation towards the upside. Now for AMD, you can see this one getting back underneath key technical levels. We're most likely going to come back down into that previous day lows coming into market open here. We're still fairly bullish here on AMD. Now you just like to see it maintain above that 520 for a continuation higher, preferably above our pre-market highs for a flip back up and towards our previous day close. So for AMD, a lot of these tickers are fairly neutral today after this gap down here on the major indices. A lot of the names, if we do want to look for upside today, is going to be the previous day low bounce play, or as I mentioned, above our pre-market highs, continuation towards the upside. As for Nvidia, this one was unable to get above our previous day highs in that 207. You can see a lot of sellers kind of stepping in above our previous day highs. Sellers stepped in above our previous day highs here, rejected, gap up. Sellers stepped in once again, pushed this back towards the downside, came back up and towards that previous day highs. Now we are at our 204. So for Nvidia, this one is more neutral than anything on the higher time frames, at least for this week so far. Major key levels that we have marked out is that previous day highs that we have marked out along with our 206. I'm actually just going to refine a couple levels here, but for NVIDIA, the major key level that we have marked out is going to be this 206. And then we have our previous day highs marked out, which is a key technical level here as well. So for NVIDIA coming to market open, if we do want to see some upside, it's going to be a little bit more difficult. NVIDIA, a lot of sellers have been stepping in above our previous day highs or above this 206 for any sort of continuation towards the upside. Other key levels that we have marked out is going to be our previous day lows. If we get underneath our 206, or sorry, hold underneath our 206, we can see continuation underneath our previous day lows. We can see a flip towards the downside. As for Apple, the key technical levels that we have marked out is going to be that 328, above our 328 continuation back up and towards that 334. If we reject off this level, we can see a push right back down in towards our 322 on the higher time frame. So for Apple, this one's still bullish on the higher time frames. There's one of two scenarios that we can be looking for. The break above our previous day highs, flip back up in towards our all-time highs and above, or if we break underneath our previous day lows, then we could be looking for our previous all-time highs retest off our 315. So key levels that we have marked out on Apple is just going to be our previous day highs. This is the level, we can kind of refine this one here as well. So 330 is going to be key. A flip back above, continuation towards the upside here is in play. The rejection, as I mentioned, we can see a push towards the downside. As for Google, so Google does have earnings today along with Tesla. We're at a very key technical level. We can see another bounce coming into earnings or after earnings. If we get underneath that 350, we can see a bigger push towards the downside. We do have earnings, as I mentioned, so we'll just be a little bit more patient and wait for after earnings on Google. As for Microsoft, this is one of the only names that is holding up. So software has been moving up nicely as of recent. Higher lows are being built on the daily. Now we just like to see Microsoft back above our 400, hold above that 400 for a push towards the upside. So keep an eye out on Microsoft above our previous day highs. This one has an inside bar day as well. So keep an eye out on Microsoft. Key levels that we can have marked out is going to be that previous day highs. As I mentioned, we do have an inside bar day. So you can just mark out this. If we can break above our previous day highs, we can see room up in towards 402 along with the high, which is 406 back here. So let's keep an eye out on Microsoft above our previous day highs. As for Meta, this one a lot more rangy. This one is kind of right in between that 650 along with our 630. What I would like to see on Meta is the break back above. You can see above our previous day highs rejection, above our previous day highs rejection. I like to see the hold above our previous day highs for continuation up and towards 660. So let's keep an eye out on Meta above 650 along with our previous day highs. Amazon, similar thesis, a lot more range after rejecting last week, rejecting on Monday, and we're kind of back inside this range here. Netflix, a lot more rangy here as well. Key levels that we have marked out. We also marked out this inside bar day on Netflix. We kind of just bounced from our previous day lows all the way back up and towards our previous day highs. And now we're right at our 69 key psych. So keep an eye out on Netflix. If we reject off this area, push right back towards the downside. The break back above, we can see this nice reclaim setup. SpaceX, first day that showed a little bit of strength, but the same game plan every single day is happening on SpaceX as buyers stepped in only to fade back towards the downside. Every single day has been the exact same thing after the first initial 3 days after its IPO. So for SpaceX, every single, there's not really too much to talk about. Key levels that we do have marked out is going to be that 122. Underneath our 122 flip, we can see room down in towards that 120 here on the higher time frames. The reclaim back above, we can see move up in towards that 125. So with that being said, I'm going to head on to some other tickers here. I'll head on to some semiconductors and some memory names for the next 5 to 10 minutes. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. Of course, if you guys haven't joined the free daily watch list, that is in the description below as well. Okay, let's head on to some tech names that we have, or sorry, some semis. We can start off with AVGO. This one more so ranging on the higher time frames, not too much to talk about on this. Key levels that we have marked out is just going to be that 400 along with that 350. Right now, we're just kind of right around equilibrium here on AVGO. So not too much is going on the higher time frames. Palantir, a little bit more consolidation as of recent as well. I'd like to see this Palantir break. What I have marked out is going to be this downtrend line. So for Palantir, I'd like to see the break back above our 136. That's going to push this back towards the upside. But as for now, Palantir more so kind of consolidating. We kind of do have this bull flag forming here as well after this reclaim. So for as I mentioned, for Palantir, I'd like to see the break back above, flip for a push towards the upside. As for MU, so MU was one of the names that ended up having a really solid push towards the upside yesterday. This is one of our main watches coming to market open. We bounced nicely off our gap fill or daily gap. And as you can see, buyers stepped in, reclaimed back above key technical levels. You can see right now for MU, this one's fairly bullish. We're kind of forming this potential inverse head and shoulders here on the higher time frames as well. So what we have is our left shoulder, we have our head. Now what we like to see is maintain that right shoulder above our 900 for a pushback towards the upside. So for MU, the key levels that we have marked out is going to be this 900. Maintain above this 900, we'd like to see this higher low be built on the daily and the hourly time frame. So let's keep an eye on buyers to step in off our previous day lows in this kind of general area for a move back towards the upside. So main levels that we can have marked out, let's just refine a couple of these levels. MU key level is going to be this 900, and then other levels that we have marked out is now just going to be that previous day lows. So previous day lows, drag it up, is going to be that 920. So key levels today, 920. Let's keep an eye on a potential 920 bounce. If we get underneath our previous day lows, then we can see a push all the way down in towards this 900 on the higher time frames. As for a few other tickers, SNDK right back into key technical area, previous day lows. Let's keep an eye on a potential mini bounce play coming into today. INTC, another one, gapping down in towards that previous day lows here. Let's keep an eye on that previous day lows area. Let's just kind of refine this. 101, multiple touches. Let's keep an eye on this bounce play for a move back towards the upside. Underneath our previous day lows, there is definitely a lot more room lower towards the downside. So keep an eye on this previous day low level. WDC, similar thesis. Keep an eye on that previous day lows keep an eye on that previous day lows on WDC. SK Hynix, this one has had a lot of volatility as of recent. And you can see it's respecting these levels very nicely. 176, 168, 152. Not really a clear direction, but not really a clear direction on the charts, but very nice very nice key levels that we're respecting on the technical side. MRVL, a lot of these ones are bouncing, but now you can see we are kind of dipping here with the overall markets. Of course, we are pulling back here on the spine cues as well. Someone's mentioning AMD. Yeah, AMD seems like we're having a pretty big spike in the pre-market. Someone mentioned there was some news here on AMD as well. So this one is right at our previous day lows area. That's going to be key coming into market open. And yeah, let's go on to a couple more tickers. Soxel, this one is just the 3x leverage, same thing as the SMH, but key level is just going to be this one moving forward. Same thing as the SMH. We just have this level marked out, which is our previous level support, 570 here on the higher time frames. Okay, let's go on to a couple more tickers. If price goes higher or lower in the after hours, do you consider that the previous day highs or lows? No, that's going to be our after hours highs and lows. The previous day highs and lows is just within the New York session, and then these are going to be our overnight session high or low. Let's see what else. Jack, do you use limit or market orders? I use market orders. If the spreads are very wide and it's thin, then I'll use limit orders. But normally speaking, I will use market orders. Okay, with that being said, there's a couple more tickers. Let's go over Hood. Higher time frames on Hood. As you can see, this one is pulling back. We broke underneath key technical levels, but still bullish here on the daily time frame. Once we broke underneath this 110, a little bit weaker. So for Hood, we'd like to see the reclaim back above that 110 is needed for a flip back towards the upside, up and towards this 120. If we break underneath this 110, if we hold underneath this 110, we can see a push right back towards the downside. SoFi kind of similar. SoFi is just consolidating. Not really too much to talk about on that one. But yeah, for today, game plan is just to keep an eye out on our previous day lows coming to market open. Key levels that we have marked out is going to be that 702. Keep an eye on 702 here on Qs. SPY previous day low 745. SMH key level 572. Main watches for today. For upside, I'm going to be a little bit more patient. It's going to have to be this bounce play here off that previous day lows. A couple names that would look good. AMD, if we can get back above our pre-market highs or the bounce. Same thing as the rest of the tickers. We're going to be looking for that previous day low bounce or the break back above our pre-market highs. As for everything else, I do like Apple. If we can get above our previous day highs for a flip back towards the highs, and then yeah, that's about it. At least for the all the rest of the tickers in the markets, with the semis pulling back and some memory names pulling back in the pre-market. Definitely a lot weaker today. We'll have to keep an eye out on that previous day low bounce. For today, I'm fairly neutral coming to market open. I'm gonna just wait for the first 10 to 15 minutes as per usual, and come into the markets with a soft bias. If the markets drop right off the bat and reclaim, right, we can basically flip buys fairly quickly. So for the Qs, like yesterday, we rejected off our previous day highs. So we're bullish at the start, but then you can flip bearish once you get back above. Then you can flip back bullish, right? Same thing today. If we break underneath our previous day lows, right off the bat, we could flip bearish. And then very much well within the next like 20, 30 minutes, we can reclaim and we can see this rally back towards the upside. So overall markets as of recent, a lot more range slash consolidation. So you don't want to have overly biased to upside or the downside. And of course, if the markets do reclaim back above key levels or reject, right, you do want to be open and playing both sides, and you don't want to hold on to your positions, right? Because you can see, right, after a push lower, gap up, after a gap up, gap down. So you can see the overall markets, there's not really any solid higher time frame thesis. It's more so just ranging based off of key technical levels on the lower time frame. So in this case, we'll be a lot more patient here in the markets. But yeah, with that being said, that's going to be it for me today. I'm going to get ready for market open here now. Hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. That being said, if you guys haven't joined the free daily watch list, that of course is in the description below, sorry. And that being said, I'll see you guys all tomorrow. All right, peace everyone.